All right, guys, my name is Gordon. If I've never met you, I am the Southeast Regional Rep. So I've owned an affiliate with my wife now in Greenville, South Carolina, just about 7 years. So, like I said, this is level 2 of money management. I'll be the first to say I think that money is something as affiliate owners we do not openly talk enough about. But if we're all brutally honest with one another, if we are not stewarding our finances well, it is very hard to leave an impactful legacy for years because we're just struggling to make ends meet. So I've known Dave personally now for a while, and Dave has definitely been gifted just in his business sense. And Dave and I sat down after one of our Philly gatherings about how we could best utilize his just skill and talent. He led our level 1 money management, which was phenomenal. And a lot of you asked for level 2, so we were here at level 2. So Dave, I'll turn it over to you, my friend.
What's up? All right. So, just a little introduction of me. I'm a full-time firefighter. I own 2 affiliates. I do business consulting outside of the world of CrossFit gyms. And then I'm on a nonprofit and I help out with the adaptive CrossFit games. So that's my stint of everything that I do. I have no kids yet, so that's probably why I can do so much. But let's jump into this. I'm going to share my screen here. Can everybody see my screen pretty good? Great. Let me pull up my notes.
Boy, that picture, I tell you what, of all the pictures you could have chose, how many times do you have to go try to find that one? Delaney, is this good, Delaney?
Yeah, this is my headshot for all our coaches' photos.
Oh, I love that.
So it's kind of cheesy, but it works. All right, so today we're going to talk about From WOD to Wealth is the title of this. We're just going to get into a lot of more nuances with the financial systems in your gym. Really starting with business structure, what and why we're doing the business structure, overlooking on some tax deductions, strategies, KPIs, flow of stuff. If you have any questions, either raise your hand or send it in the chat. And while we're going through this, Gordon can jump in and be like, hey, we got a question. I'll be like, oh, okay, great. Overview here. There's a little bit more details on this. So main thing we're going to talk about as far as like your layout of your business is going to be your LLC versus your S-Corp. When do you jump between the two? How to pay yourself, tax deductions. I'm going to talk about some general tax deductions that people generally miss or are unsure if they want to use them. KPIs, which is easy metrics into how you can increase revenue at your gym and how you can increase revenue for yourself, and then just some cash flow management stuff. So there will be a Q&A after this. So if you stick around, if you got questions, if you stick around because you think other people have better questions than you, it's going to be great. So stay tuned. You guys ready to dive into this? Oh, yeah. All right. So let's talk about entities, right? Your LLC versus your S Corp. So if you own a CrossFit gym, you should 100% have an LLC at the bare minimum. Now, this just gives you liability, and essentially that means if something happens in your business, they go after the business first, not your personal assets. So the limited liability here is basically the LLC takes the brunt of it if something happens inside the business. Now, if you're a sole proprietorship, so it's a sole prop, they can come after everything. So that's why I always recommend at least bare minimum have an LLC. So in there, there's a little bit more flexibility into what you have to do as far as like rules for management stuff. The one thing that differs this from an S corp is going to be the type of deductions you can take as far as tax strategies to use, and then that this is a direct pass through. So if you are a sole owner of your gym, if you have business partners, you'll have an LLC. Any profit that's made gets directly passed through to you on your personal taxes, whether you take the money out of the business or not. So hypothetically, let's say that your gym makes $250,000 in a year and $50,000 of that is profit. Whether you keep the profit in the gym to make it run, to help it run for next year, to get a month ahead, you still are paying taxes on that 50 grand. And so that's mainly what the LLC is there for. So a lot less compliances as far as like filing taxes, a lot less fees for CPA, and unless you have employees, you do not have to have like a payroll system like you would for an S corp. We all good on LLC stuff. All right, so moving to an S corp. So the significant difference here is when you're an LLC, you have to pay self-employment tax, which is 15.3% on top of what you would pay to the federal government and your state government anyways. So the S corp is a way, once you make a certain amount in profit, that you're actually going to be able to save money on taxes by paying yourself a reasonable salary. And then all the profit you don't have to pay the self-employment tax on up to, I think it's about 140 grand. So a little bit more complexity as far as like compliance and what you have to do on a yearly basis. So you have to have a yearly meetings. You have to, there's a bunch of requirements that keeps this. Your pay has to be reasonable, which we'll talk about when we kind of deep dive into the S Corp. And then your annual filings and your annual meeting is something that you got to keep up with. Not because you have to submit it anywhere, but if you were to get audited, that's where you want to make sure all your records are in place.
Dave,
So,
you may talk about this later too, but I know we do S-Corp with our businesses.
yep.
Are you going to touch on the benefit of like how often you're doing distributions?
Yes,
Cool.
yeah. So there's a lot of different aspects to how you do distributions. Um, the the differences between the two, and we can talk about this here. This is a great slide for this. In the LLC, if I have a business partner, and let's say I own 60% of it and he owns 40% of it, when we take a distribution, let's call it 10 grand just to be on a round number side, it has to be split up 6 grand to me, 4 grand to him, 60/40. You can pay differently, but I'm still responsible for 60% of that, no matter what you take in owner's draw. So if one of the two partners is working in the business and on the business, it makes more sense to make it an S corp so they can be an employee as well as a owner and take distributions. So those are the two differences with it. Did that answer your question?
Yeah, and I'm sure you'll talk on this too, but I love how you talked about reasonable salary payments because that's one thing that we had to learn here. Like, what is reasonable? Yeah, and what does that look like?
Yeah, and reasonable looks a lot different for different people. So like my reasonable salary in my gym is going to look different than Gordon's. It's going to look different than Mark's potentially if kind of what he does. So the example that I've got down here is like in when you make profit, when we get, and I'll talk about this a little bit in my next slide, but it's around the 50 to 60K mark is when we want to really start thinking about transitioning to S Corp so we don't pay more in taxes than we need to. All right, next slide. Okay, so when to consider an S Corp. So this is kind of the more detailed dive into S Corp. So profitability wise, so when we're in the S Corp stuff, your profit line that changes depending upon how much money you make and if your family makes a certain amount of money is around the 50K mark. There's a lot of different like ways to break down how this works. But typically for like federal taxes, you're going to be in the 12 to 22% range as far as federal taxes. State taxes on an average are like 5 to 7%. And then once you get into this range, self-employment tax is 15.3. So they stack together into what you would pay in your taxes every year. This was quite a shock to me when I had a business partner and we were an LLC only. And I had two incomes and my profit in stacked on to the top of my regular income, which put me in a higher bracket with the 15% I had to pay on it. And I got slammed with a tax bill. And I was like, I don't understand why I went from getting money back to paying 5 grand in taxes. And wild mistake on my part because I was working in the business and on the business, and he was just working on the business. So a little bit of what I didn't know kind of hindered me in that scenario. So um, when we hit the 60K, and this is the profitability, 60K, we want to go to an S Corp. You save so much money in the calculation version of this. So 60K is kind of the number of whether you take it or not, right? Is kind of the number of what you want to move to an S Corp to save on taxes. So tax savings, the difference on this is that you're going to have to, you pay a little bit more in business taxes. You're going to pay a little bit more in your CPA cost. So just kind of figure that you're going to have a little bit higher compliance ratings. And if you don't do your own yearly minutes, right, you got to pay a lawyer to have your yearly minutes for your S Corp. Now, let's talk about reasonable salary, because that's a big thing when it comes to an S Corp. So let's use the example of 50K. What is a reasonable salary depends upon what am I going to pay somebody to do the job that I would do working in the business that if it wasn't me. So the way that I have calculated it out before is what would I pay somebody to coach the number of classes that I coached when I was the sole individual? What would I pay somebody to do the daily admin things on location that need to be done? And so you can calculate that several different ways. What's close to a living wage? For me, a little bit different. I have a full-time job. So my use of it is kind of like while it's full-time hours, it's still a lower salary because I have something else to show the government that I do a number of hours of. So for me personally, my salary is around the 20-30K mark. And that keeps me as a reasonable thing because I can compare it to, oh, but I have this other job.
Dave, with that too, just to be clear, that is your salary that you take from the business. That does not include any additional hourly pay of coaching.
So that is my coaching,
Okay.
admin, everything that I do. I lump it into one.
Okay.
So I don't break it down into hourly because some weeks I may coach 15 classes because I'm off from the fire department, and other weeks I may coach five. So I play it on an average basis. And I've calculated out on average number of classes that I do per week, multiplied by 52 weeks, divided by 12 months and then divided by how many times you pay. So if you pay every 2 weeks, then you would divide that by 26. If you do it by the first and the 15th, then you divide it by 24. And so that's how I built my like full-time salary. And so for me, I have full-time employees that make living wages, right? So for me, because I have the fire department, my reasonable salary is quite different. When we talk about the 50K, the reasonable salary for you could be if I paid somebody else to do this about 30 grand. And then that means you would have 20K that you would take in profit in distributions. And then from there, you roughly save when you transition to an S Corp around $1,500 to $2,000 in tax savings on it. So I have some examples that are on like the backside of this. So at 40K, you're kind of at a, am I doing this because I have a partner and I work in the business and on the business, right? That's up to 40K in profit. The reason you would elect to an S Corp earlier if you're not making, if you're making 40K or under is solely because you have partners, people are working in the business, people are working on the business, or silent partners. That's why you would elect to an S Corp early. Once you hit that like 50 to 60K mark, we're transitioning into an S Corp mainly because you're going to save somewhere between $1,000 to $2,000 in taxes every year on your personal taxes. And then once we get up above that, you can slightly increase your salary to make it more reasonable. But then our tax saving becomes big up until we're taking distributions of 140K in a year, because after that, self-employment tax doesn't exist on profit. So So those are kind of the numbers on that. So rule of thumb, just a reminder, below 50K, ask a CPA. Typically you stay in LLC. Above 50K, start to move into the S-Corp. And then anything above that, if you're not doing it already, make it an S-Corp. Unless you have some cool structure where things go into holding companies and trust and all that. But if you want to dive into that, that is a different money conversation. Long-term business on this. So last part of this, this is a great way to set yourself up tax-wise for lots of different years. It also is a way to pull yourself back out of the business. So if I'm paying myself a reasonable salary and I want someone to take over all the roles that I'm doing, I can then take my salary, move it to that person, then lower my salary because the reasonable things I'm working on the business can be lower because I'm paying this other full-time person to do the things that I was doing. Just another add-on in order to do that. How are we doing on this? Was this a lot of information? I have a whole cheat sheet that I can send everybody on like where the money breaks down. Let me see. All right. Uh, let's go into paying yourself. All right, so paying yourself a reasonable salary. We talked quite a bit about this. Well, one thing that I want to talk about when we get through this is if this is your sole income, if you're married and you have a partner that makes X amount of dollars in a W-2 salary, and then your money is stacked on top of that, there's a lot of different reasons why you would potentially elect to be an S-Corp earlier to save money. So the example that I have here is if potentially you had a spouse that was a teacher that made 50K and you made 50K from the gym or 40K from the gym, you may want to, if you file together, you may want to elect to be an S-Corp earlier because your taxes on profit in an LLC are going to be taxed second. And so they're typically taxed at a higher rate and they'll stack on the 15.3 self-employment tax on top of that. So just know that when it comes to tax savings on that. And then you'll really get a good tax savings. Typically, if your like family makes around the like 80 to 100K mark, especially if you're half of the revenue that comes in as far as profit goes. What do we have any questions on this while I'm in this middle ground? Gordon, you got anything?
No, I think the biggest thing for me was like when we were going through our S core, it was almost like as your profit continues to grow, how often were you changing the salary that each individual was getting? Because
Mm-hmm.
too, it's like it becomes a slippery slope, right? You made a
Mm-hmm.
comment about like partners, right? So I have three other partners, and like not everyone does the same amount of work. And so then you really start to look at like, well, reasonable salaries. Well, what if someone's, let's say they own 30%, but they're putting in 10% of work. And so one thing we had to figure out was like, how often do we increase the salaries from the S Corp? And then one big thing we're looking at now is like how often we're doing the distributions. Do we do them monthly? Do we do them quarterly? Do we wait? That's been a big thing for cash flow during our move.
Gotcha. Yeah. So the let's talk about the kind of how we increase who does what. I would break it down into work and what you would pay somebody work wise. So if it wasn't you, pull yourself out of the situation, right? If you have a partner and let's say you have a partner that just does a couple behind the scene things, pull yourself out and say, if I'm going to put somebody else in that situation, what am I going to pay them? How am I going to incentivize them to stay? And how often do I want to increase that? So the first part of that, I like to do yearly increases um, and and potentially bonuses throughout the year that come in the W-2 instead of taking owner's distributions. So at one of my gyms, we have three partners. One guy's the full-time guy. He's the head coach. He coaches 15, 20 classes. He does all the membership in-person stuff. He's there cleaning, right? So he does a lot. And so if he goes above and beyond something that would be outside of his normal task, me and my other business partner will be like, hey, do we want to bonus him this month? And we have it in our payroll account. And we'll be like, sure. So we just tack on a bonus into his actual salary. So he doesn't have to worry about paying taxes or who does what or taking even distributions based upon percent ownership. So that is one of the way mid-year I do it. I try to do an increase at the first of the year because you do your pre-planning. We're a January to December as far as our fiscal year. And so typically in January for the next year, I've already got a pre-plan of about what we're going to make, and I've got my budget ready. And so that's where I move my increases as far as salary goes. The other thing you asked was distributions. So I'm big on quarterly distributions. And quarterly distributions, I move money into what I call my profit account or my reserve account. And in there, after 3 months, I can see what the minimum I want my reserve account to be, which is something we'll talk about in a little bit. But I have a minimum of what my reserve account's going to be, and then I take the percentage of overage on that, and I quarterly give myself an owner's draw.
Do you do that for forecasting as well? So like, we always have certain seasons like where summer may be down. Like, do you do that quarterly because like you can forecast better for like seasons of membership churn? Because we do it monthly, but I'm almost like, quarterly I feel like would almost be better for like future planning.
Yeah, quarterly, in my opinion, pushes it off a little bit.
Mm,
So if you don't need the distribution now, right, because it's not pertinent to living life, right? Let's get that out of the way first. But if you can put it off when you have seasons of change, then you're not so much worried about your cash flow because you have it sitting there in your reserve account, potentially where you haven't taken the distribution yet. And so if something breaks, if something's big, right, comes out of that 3 months that you've built up. And then you can just spend it out of the reserve account and just not worry about it. And then you take a little bit less in your distributions.
And then last question, I'll shut up for a hot minute.
Go
On
ahead.
top of distributions at Brave and your other affiliate, do you guys also carry cash reserves?
Yes.
Cool. Okay.
At HSP, we have 1 month. So, and we're building our reserve. And so at Brave, we have 2 months. It's a little bit older affiliate. I've been moving some stuff in there a little bit longer. And the reason for this is in my reserve account, I have, like, we'll talk about HSP. I have 1 month of bills. So my expenses in there, that's my minimum standard line. Everything above that is what we take in owner's
Yeah.
distributions,
Yep.
but we only take a percentage of that. So typically we put money into that reserve account or profit account every month, and then we only take about 50% of that quarterly. So we still have a buffer just in case something happens, build it up, and over time it just stacks and stacks. It's baby steps though.
It really is. And how long did
It
it take you before you started to implement cash reserves in your affiliates?
so I did not know a lot about doing this. And right, so one of my affiliates is 4 years old, the other one's 9. So in the 9 year affiliate, we always kept some cash reserve, but like not enough that we could make it through the next month. We really relied on the memberships to roll. So we were kind of a barely skin by month to month if something big happened. It took me about 4 years to really get the hold on, all right, let's take a little bit less in owner draw. Let's live a little bit less under what the means really are to build up this reserve. And for us, it paid off because we had that and then COVID happened. And so it was like, hey, now everybody's shut down. And the town that my gym was in was like, hey, you can't do anything. And the one town over was like, you can do whatever you want. And so it did not help that that was the regulations that we were under. However, we had that reserve. And so we were able to make sure that we could at least pay the bare minimum bills before all the stuff came out for like the PPP loan and whatnot. Great questions. Any other questions about paying yourself smart? Okay. There are formulas, and this is where we want to write down some stuff. Where are my formulas here? There are formulas into figuring out how you want to pay yourself. So we'll talk about the LLC first. So the LLC in this formula, in kind of figuring out what your tax obligation is going to be, you're going to take your profit minus your federal income tax added to your state tax added to the self-employment rate, which is 15.3. You're going to multiply that by your profit, then subtract it from your profit. That's how you're going to figure out what your actual tax liability is. And then from there, you're on the S Corp. It's a little bit more detailed. You're still going to do that for the salary. So you're still going to do you're going to have your main salary or your total, right? Then you're going to have your salary times federal rate, state rate, payroll tax rate. Then you're going to add that to your profit salary. And then you're going to subtract from your profit salary times your federal rate and state rate. I will put these in the chat because they are rather detailed once we get to the Q&A section. So just know they're in there. So a little bit detailed version of how you figure out kind of, am I going to stay at an LLC? When does it benefit me to move me into an S Corp? All right, let's move on to KPIs. So this is about your finances of your gym. So these are the top 3 things you need to know about how your gym's operating. And we're going to start with ARM, which is average revenue per member, right? So this is what each member brings you in. And you can do this on a monthly basis, on a yearly basis, on a weekly basis. You can divide these out however you want. But you're going to take your total monthly revenue, you're going to divide it by your active members. Now, total monthly revenue could this includes everything that you make and bring in for the month. So this is supplements if you do it. This is pro shop stuff, t-shirt orders. This could be memberships on top of that. So this is everything that's in there. And that's how you're going to find your ARM. Your cost per member is your expenses divided by your total active members. And then your profit per member is going to be your ARM minus your cost per member, right? To figure out what's your profitability. So I have this calculated out in an example. And so the example that I have is 150 members, $150 a month at Unlimited, but we're using the 4-week billing cycle, which adds 8% to your bottom line. So on a monthly basis, and I didn't add in anything as far as pro shop stuff or anything. So your ARM on this, you're going to make 24.4 a month divided by 150 members. We're roughly around $162, $163 for your average revenue per member. This is just on membership over the year. And then your cost per member, I did on average, your bills were $17,500, which comes out to about $117 as far as your cost per member. And so if you do the math on that, I have it detailed here. My profit per member is 45, about $46, which comes out to, at 150 members, about $82,000 a year in profit. Why are these numbers important? So these numbers are important because the members that you currently have are the thing that can drive the needle forward and back, right? What things can we do to increase the ARM? So do we need to have a more definitive drops as far as swag goes? Do we need to increase our pro shop? Do we need to make our pro shop more accessible, right? Do we offer seminars? Do we offer events? So what things that we do that can increase the average rate that each member is paying a month or per year for the gym. And so this is also a great piece to figure out, where do I need to increase my membership prices, right? And if you haven't increased your membership prices in 2 to 3 years, I would highly suggest that you look through these three numbers to figure out, what do I need to do for a rate increase?
Dave, stay right there for a second because I love the fact that we're focusing on the arm. We talk about that a lot here at my affiliate because I had the mindset, and you may have too at one time, we're like, oh, I just need more people through my doors. I just need more people and I'll make more profit. And literally 2 years ago, we were like, okay, hey, we sat around 200. We're saying, hey, rather than push more people, we are going to push a higher average revenue per member. And
Mhm.
right. So, like, to your point, what did you guys do outside of raising membership that kind of helped increase that?
We got quite more strategic on our t-shirt and swag drops. So we do one a quarter, and we do pre-sale only. And the pre-sale funds, because we make roughly about 40% margin on our stuff. So the pre-sale adds to the revenue cost. And so all of our members know that it's coming, right? They know that this thing is happening. And so they're like, oh, I'm ready for it to drop. Let me get my pre-sale in. And it helps out there. We do get a couple extra stuff. So we do keep a pretty stocked pro shop. That was the other thing that we did. We started asking members what they wanted and what flavors they liked and what they were looking for. And a lot of it was like real quick stuff. So we have like Fuel for Fire, we've got a protein bar, and then our drinks are kind of in the wave of what people like. So those are the two big things that we did. We run one competition a year for CrossFit, and we run two Olympic lifting meets per year. And so that also increased our revenue, not for revenue per member, but if you've ever run a competition at your gym, like 20 to 30% of it is members from your gym that just want to compete. So it does help with that too.
No, I think that's good too, because I think we have to remove ourselves from the archaic thinking that we just need more people through our door, where maybe we provide a greater service and value to those people inside of our community and how we can increase the arm.
Yeah. The other thing that I would say with this is, how much coaches development are you doing? Is the product on the floor getting better? Are you putting enough money aside to do small improvements that are noticeable? Because those things give a better experience. And when the experience is better after a couple years, it's easier for people to palate a membership rate increase. So for us, we've done them every 2 to 3 years, which there's a lot of thought out there of why you move it every year and 3% because your bills are going up by 3%. But I wanted to add value prior to adding a membership increase. So making sure that the members saw the value that we invested into the gym before we tacked on the cost of a Starbucks, right? One of the other really big things that we did a long time ago to increase our arm was we added 24/7 access, and we tacked it on to our unlimited membership.
I got to ask about that. Sorry.
Go ahead.
That's
Yeah.
I'm in the same boat, right? How did you determine what to charge for that?
So I figured out what my rate was that I was going to pay for this thing,
Okay.
and what per member at the time that it would cost for me to kind of recoup things within a 3 month range. And then may when you obviously, once you recoup it, right, then it's all profit on top of
Yep.
that. But the I think our install was like 2 grand, and then it's somewhere between 150 to $200 a month because we use hybrid.
Same. Yep.
And I added that together and figured out, hey, okay, what am I doing in 3 months? Okay, I have 120 members. if I add $10 to the unlimited membership, where does that move me? Is it 3 months that I recoup it? Is it 6 months that I recoup it? And then after that, I mean, I'm a 9-year affiliate and I was gym number 7 on hybrid. So we've had it forever.
So can we stay here and elaborate? So Andy's got something from CrossFit Garage in Woodstock, Georgia, and then I'm gonna add on to that. So Andy says, question on the 24/7. It cost him $200 and he does not have a service fee on it. What should he charge?
Ooh, how many members does he have?
Andy, come off
About
camera. There you go.
about 100. But I just used a lock off of Amazon that
Yep.
holds like 50 people. I have to do it manually, but it's not tough. It costs about $200. Insurance said I need cameras, a lock, a cell phone, and a better waiver. So I mean, maybe it was $300, and I was all done. And it took me about an hour to put it all together, maybe 2 hours.
Yep.
And so I got a guy who's like, let me pay you for this. I'm like, dude, I don't even know. I mean,
Yeah.
I let him pay me for it, but
So the next question that I would ask is, what memberships do you offer at your gym?
only one.
Unlimited?
Only one number. You're either a member or you're not.
Right. So you get unlimited access. If you don't mind, what does that cost?
175.
175. Very close to us. So our unlimited membership's 179. I do have a 24/7 access open gym only membership
Yeah.
that is 135.
Interesting. Okay.
Yep.
I don't even know what to price it. I just said, dude, just put whatever you want right now. We'll just make it that, and I'll figure it out someday. This is someday. Thank you for saying it.
Yeah. So what we did is we tacked $10 on to our unlimited membership at the time. And our unlimited membership, I think, was 150 8 years ago when we got hybrid. So we jumped it to 160. And all the people that were unlimited, we were like, hey, here's the thing that you get. If you only have one membership, even easier, right? Here's the thing that you get. It's $5 extra. You get unlimited 24/7 access. For other people coming in, maybe 175 isn't right. Maybe it's 125, right? Or somebody feels like they're getting the value. But definitely think about this. What is your cost per member? That membership cannot be lower than your cost per member, because otherwise you lose money.
Oh, I'm really good at that.
Stop it.
We all are in the beginning.
He's not in the beginning.
I know.
17 years of it.
Yeah. We've been
I
working
can tell
on
you
this.
all the stupid stuff that we've done.
Yeah. I mean, to parallel to that, I have probably missed out on, $500,000 in my 9 years at Brave. So,
Dave, on that too, right? So Andrea asked a really great question. So Andrea Scott wants to know, what is a good profit per member? I know some of that depends upon size, but what do you feel is a good profit per member?
That is a tough question. That depends a lot really on your area, your cost of living, right? A profit per member in California is going to look way different than a profit per member in Beaumont, Texas, right? Where the cost of living is quite different, right? $200 gets you 5,000 square feet, where 200 gets you, 50 square feet in California, right? What I would look at is what does it take to make a full-time wage? And so in the realm of, $50,000 for a full-time salary, which is what a teacher makes, an everyday job type thing could be around that. That's what you would do at 150 members. You're looking at $25 to $30. At 100 members, that number is a little bit different. So it kind of varies on what you really want to make.
So I told Andrew to come off and ask you, because she actually is in North Carolina. So Andrew, you don't have to turn on your camera by any means.
Yeah.
But if you want to come off mute and we could chat about it.
Okay. Yeah, I'm in Newbern, North Carolina, so pretty transient military community. We
Yep.
are about 3,000 square feet, 100
Okay.
members. On average, we stay at about 100 members a month. And
Okay.
just, looking for some kind of target ideas. I ran my numbers and they don't sound great, but they're not, I mean, we're making money. But I was just trying to get a gauge of, what my target might be or should be.
Yeah. So one thing to add to the ARM, do you have a intro or a membership sign up fee?
We don't.
That is so one of my good buddies runs a gym in a army town, and we were talking about the equipment fee. So I do $50 equipment fee to help me upfit the gym. He does $100 sign up fee, or like an onboarding fee, where he has a little process that doesn't really take that long. It's maybe an hour, right? But if he pays somebody $25 to do that hour onboard, he makes 75 off each member because they have $100 onboarding fee.
Gotcha.
In a
Okay.
transient town with a lot of military, right? It's easy because they pay it on the way in, and then they don't have to worry about anything weird popping up throughout the months.
Right.
That is one way to increase it. What's your membership rate?
We have three. We have 3 days a week at 100. We have unlimited classes for 125, and then we have hybrid for 150.
Okay, so unlimited classes plus hybrid is 150.
Mm-hmm.
Is have you moved your prices up?
We have not. We bought it a year ago. Our
Okay.
anniversary is this week, actually.
Oh, congrats.
Thanks. So we are talking about it a lot and thinking about it a lot, which is why we're taking these classes. But
Yeah.
so we have not yet.
Okay.
We're a little, well, I'm going to be a little afraid. My partner is ready for it. I'm a little scared. But yeah, that's next into consideration.
Yeah. I would say that those rates, depending upon where you are lower than what the kind of the average is across the nation.
Yeah.
So construct a really good email, like a really nice email saying, hey guys, this is what's happening. Use what I call the 30, 60, 90 rule, which is let them know 90 days ahead of time, let them know 60 days ahead of time, let them know 30 days ahead of time, and then probably 2 weeks prior, just to keep them informed. Hey, your membership is going to go up, I don't know, $10, $15, right? And then say the way that we're going to do this, the easiest way I've done it in the past is I jump it $5 over 3 months. So it's not a sticker shock of like, oh my God, it just gradually builds them up.
Okay.
Andrew,
Okay, thank you.
Andrew,
Yes.
if I can just add one thing in there too. So I remember when we went up on our prices. So when we first opened up, we're like $125, and I don't think we went up for like 3 years, and we went up $5, just five, and we were so scared that all these people were going to leave and everything. And I remember sending the email, and we had members say it was about time you went up. Like you should have went up. And so to you, Andrew, like if you provide a great service and value, and the people are bought into what you're doing, there you may have maybe one or two, but just remember one or two people do not define the success of your business. And so just being aware of the value that you provide. So we just did um, a membership increase as we're getting ready to move, and I didn't bat an eye because I was so confident in what we provide. And so I know you guys are still new affiliate owners, but just man, be confident in the experience that you can provide, and if there are some things you can do from a coaching standard or even a facility standard to increase the value and let your members see that, man, they're going to love that even more.
Okay, cool. Yeah, we're feeling pretty good about what we're doing. So
Heck
you
yeah.
guys increase your rates every year?
So Dave is probably going to get me on this. I think you should have somewhat of a smaller increase every year. We have not done the best at that. So I've been open for 7 years and I've only increased my rates 3 times.
Okay.
I have
Yeah,
been
I
open
think
for 9 years, and I think we've increased rates maybe 3 times as well.
We're the same, Dave. Look at
So,
us.
I always, when I look at increasing rates, I think of two things. I think of what is the climate right now in people's finances as far as like what's going on in the world, and then have I added enough value for them to not bat an eye at it? And I will tell you, my experience was when we added in the equipment fee, which was $50, we had one person out of like 150 be like, this is terrible, rah, rah, rah. And it was someone that I didn't want in the community anyways. So totally fine. Everybody else was like, oh, this is amazing. What do we get to choose? Do we get to buy stuff? So they were so amped about being able to help us because of the product that we were providing them and the community that we had given them, that it was a no-brainer.
Okay, cool. I like it. I'm getting more brave. Thank you.
Heck
Clear
yes.
communication is the key, though.
Dave, we had another question come in from Lindsay Martin. So you talked about increasing the average revenue per member. So for your pro shop, what you guys do at Brave and your other affiliate, what is your method for members buying products? Do you have a front desk person or is it self-checkout? And if so, what tools do you use for that?
That is a great question. This is where I am wildly archaic and behind the times. I have a plan for the future. We haven't put it in yet. So we have a fill out sheet that basically people put their name down and mark tallies off. We keep a really strong inventory so we know if stuff's missing or what's not missing. And then we run it once a month because we can pull everybody's numbers together. I have a full-time staff member that runs and does all the pay for the prior month at the beginning of the month, but we keep it on pen and paper. Realistically, the easiest way to do it is to have an iPad or some sort of digital device that is right there that has that the only thing that it can access is the purchasing system. That's what we're going to go to in 2026 is we're going to put something up there that way anybody can tap a card, scan a card, punch in their number and to just buy things on the spot. It'll just make it a little bit easier. Also depends upon what you use as a software and what your fees are. So we at MindBody used to have weird fees. So we would try to pool all of ours together to where now we're on Stripe and it's a flat rate fee. So it's a lot better, which is why we're going to transition. Did that answer the question? Feel free to come off mute.
Yes, I appreciate it. Thank you.
Great. All right. Any other questions? These are great questions on KPIs or how to move your arm up. Okay. Let's talk about my favorite thing, tax deductions. All right. So majority of these tax deductions, well, the first one, the Augusta rule, this only applies to S-Corps. So the offset to this rule is if you're just an LLC, this would be the home office deduction. So you would find a space in your residence, wherever you live, that is where you work. You need to find the square footage of that versus the square footage of the entire place. So hypothetically, let's say I've got 1,000 square feet house and I have a home office that's 400 square feet or 300 square feet. Let's use 300 square feet. So, and my mortgage is $2,000. So I can take that 300 square feet, which is 30%, and I can use that as my home office deduction on taxes, which is for an LLC. The Augusta rule, if you're an S-Corp, the Augusta rule states that you can rent your house out to your business up to 14 days a year. Why is it called the Augusta rule? For Augusta National, where they have the Masters golf tournament and the houses that are on the golf course are rented out for 14 days by Shell, and Shell rents them out for 50 grand a night, right? And people were like, I'm not paying taxes on this. So they started the rule actually in that state and has now become a statewide thing. So up to 14 days, you can rent your house out for fair market value. For a lot of people, this is somewhere in the range of like $500 to $1,000. I'll give you the code. I'll give you the cheat code that I use is I have my routine monthly meeting at my house. I have a scheduled date that has the dates of the meeting on a Google Doc. I have a specific way that's coded into my QuickBooks where the money moves for rent. You have to have an invoice. So I have an standard invoice that I make from the business and send to me personally. And I have a rental agreement. And so I have a rental agreement that I'm the business owner and I'm the house owner. And so I have signed my own agreement to rent my house out. That's 12 days a month. We always do a weekend retreat in December at my house, which rounds out the 14 days. This is a really cool rule because with this rule, for me, it's $1,000. So $14,000 a year from the profit goes to an expense. So I don't pay taxes on it as a business. On my personal taxes, my CPA will go in and use the Augusta rule, and I don't pay any taxes on that 14 grand as well. So it's kind of like free money when it comes over, or tax-free money, if you'll say. Does anybody have any questions on this one? Okay. If you need any templates, email me. I have templates for agreements. I have templates for how I do all this stuff. All right, second one is going to be heavy equipment or heavy machinery. We don't have a ton of this, right? So the deduction here, if you are in a higher profit line, is to make your vehicles company vehicles, right? The suggestion on this is to buy something that is 6,000 pounds or heavier. And when you do that, you get to accelerate the deduction. So this is one of those things, you got to have a truck to move equipment, right? Or you've got to have an SUV to move equipment, right? So this is something that if you're looking for a new vehicle and you have the profit or the revenue, right? Get a company vehicle, get company insurance, and this is something that you can accelerate if you need to, right? To offset paying taxes on profit. If you're an LLC, you can do the company vehicle. You can also do, for both LLC or S-Corp, you can also do mileage. And so your business can reimburse you for mileage. It's 70 cents per mile. And if you keep a nice log of it and you have a good bookkeeper or a good CPA at the end of the year, right? You keep your log. And what happens is all the mileage that you drive for the gym, you can offset that by getting reimbursed, which offsets owner's draws for your mileage 70 cents a mile. If you have a very efficient car, this works out really well. If you have a big old truck, it works out great because you're still going to make more than you are on paying for fuel. But this is just one of the other ways that you can use this as a deduction. So if you're not buying a company vehicle, definitely keep track of your mileage. Definitely, you don't actually have to pay yourself. You just have to have it notated in your system. Because if you pay for fuel with like a company card, that actually counts as an owner's draw. And then your mileage offsets that and gives you a little bit more deduction as a reimbursement. Any questions on that one? All right, last things, travel, education. CEUs, health insurance. If your business is going to pay for health insurance, obviously that is something that you should go down. That is a deduction as far as the business pays for it up front. I'm not super versed in that, but I do hear that the CrossFit health stuff is pretty cool. I've listened to a few podcasts on that, so something to look into as far as like less on premiums. For any education, anything that can be deemed back to you learning something for your business, you can use the business or business money for. Travel expenses. So this is a little bit more detailed, right? For travel expenses, there has to be a reason why you're making this trip. There's a lot of different ways to explain why you're taking a trip. But travel expenses are flights, any vehicle rentals, and any hotel stays. So those are the big three for travel expenses. It's really cool if your full-time employee is your wife, because then almost anything can be a business trip as long as you have a strategic plan for it. So my wife is my full-time employee. She's our head coach and GM. So that's one of the fun things that I use. So does anybody, these are kind of the main things that I wanted to dial in here. Also stuff as far as the bottom, travel and education, we can add in home internet, we can add in cell phones. Those are some of the other things that are, you definitely use your cell phone for business. You definitely use your home internet for business. So a lot of things there. There's meals. The best way to do meals is to actually log them as a presentation and have some sort of presentation thing made, logged for when you're going to have a meal. You get a higher deduction rate as far as how much of the meal you can write off tax-wise. So food is like 50%, presentations are like 80%. So now we're kind of diving into the weeds here. But those are some of the bigger deductions that I would be looking for. Definitely the Augusta rule is a win. Any questions on this? Anything in the chat? Got anything, Gordon? All right, so let's talk about some cash flow. Oh. All right, so cash flow wise, when we talk about cash flow, we're looking for 3 months, right? If you've ever learned anything about personal finances, right, you want to have at least 3 months of all your expenses just in case things go haywire. This is the same thing for an affiliate. Now, I'm not expecting, and nor should anybody expect to have 3 months overnight, right? This is a gradual buildup. And I'll remind you, right? I have a really great affiliate. We have 200 members, and I only have 2 months of reserve. So, and I've been doing this I've been in it for 9 years, right? So I'm still in the building process as well. So remember, it takes time. 3 months is the key. What I put down here for strategies, and this is going to be kind of similar to what we talked about in the reserve account from earlier, the profit account. So the goal on this is if you want to build it faster, your reserves faster, you take less draws, right? So when I look at this, you always figure out what your minimum is going to be. If your minimum is 1 month and you have your 1 month of reserve, everything on top of that, figure that number out, take 25% as an owner draw every quarter. That will fast track you to building up a little bit more. Once you get to 2 months, right, then you start taking 50% of that stack above 2 months in your reserve account, and you take 50% of that, so it'll keep stacking. Once you're at 3 months, this is where you start to figure out, all right, I'm going to take 50% of that in profit. My other 50%, what am I going to do with this 50% so it makes me more money? Am I going to invest it in something? Am I going to buy a building, right? The best CrossFit gyms out there that are most financially robust own their own building, right? It's way better to be a landlord than it is to be a renter. So am I going to save money to buy a building? Am I going to put this towards investment accounts for me as an employee, like a company Roth, a 401k, right? What am I doing with this other 50% in order to set me up long term? And so these are general numbers that I would recommend people use in order to kind of build up your reserve. And that way you always have a slush fund of cash in order to do anything that you need to. Any questions on this? Any thoughts on this? I know this is one of the things that it may take you 2 to 3 years to build up a month of reserves. And so don't feel like you're moving at a slower rate because you're actually taking profit out of the business in order to get something out of the business.
Well, I think if COVID taught us anything, right, it is, hey, we need to be a little bit more due diligent to have cash reserves. So when things, depending upon the state you're in, come where the governor says, yeah, you got to shut down for X amount of weeks. And so I think like you said, making it priority, even if it takes a minute to get there, but just having that peace of mind to know that if something of that nature happened, we're still able to function.
Yep. I totally agree with you on that. And finally, next steps and resources. So if you have questions, want any of the resources or any of the things that we talked about, reach out to me. It's david@crossfitbrave.com. Put something in the title where I know it's like Roundtable Money Management. And then feel free to ask whatever questions you got. Some of the key takeaways, right? Just on all the slides, what you're doing in your business, how are you setting up the business in order to save the most on taxes, right? What are the KPIs that you're looking at? How do we increase the ARM? And then what deductions can I use to optimize my savings on taxes? And then just building your cash reserves.
Dave, the one thing I would ask you, right? So were you naturally inclined towards the business acumen and financials, or is this something you learned over time?
This is something I've learned over the last 4 years. My first 5 years of owning the affiliate, I was the front guy and I was the doer and I didn't know a lot of things. And when I started, I was just a W-2 guy that had a profit share. And then the two guys that owned the majority were like, "Hey, do you want to buy us out at CrossFit Brave?" And I was like, "Yeah, yeah, of course. Like, of course I want to own my own gym." And then I was like, "Oh, I know nothing about this." And I didn't ask enough questions at the time, but I did have a good buddy that helped run another business that he was in. And so him and I became partners. And through 3 years of that, I was working in the business and on the business. He was just working on the business, and we were taking distributions the same. And so I was in my head being overworked and not rewarded for it. And so I got an opportunity in the second gym, and I was like, great, another way to make a little bit more revenue. And then that business partner was like, all right, well, if you're going to go into buy another gym, you need to buy me out. And so in 1 month, I negotiated a buyout of a gym and a buyout of a business partner. And then after that, it was like, all right, now what do you do? Because now I was responsible for all of the back end and all of the business stuff. And I spent a lot of time in my CPA's office asking a bunch of questions from stuff that I found online, on YouTube, on TikTok, on just stuff, just taking a lot of notes, reading a bunch of business books. So it's been quite a road to get to where I'm at.
Nice. And I say all that to say, like, regardless of where you're at in your business acumen, if you're like, I can never get to this point, like, it just takes time. And
Mhm.
like any skill that we learn in and outside of the gym, like, you just have to apply yourself and give it time. So I love that, Dave, too, because I think people can listen to you and be like, oh, this guy was just naturally born with this. He has this where you and I have chatted, and we know this comes over time. So
Yep.
one thing before we jump out of here, I really just want to call on a couple of you guys just to see what you have coming up, what you're excited about in your affiliate. So I'm just gonna randomly call on people. So if you're there or not, we're gonna find out. I'm actually Dave. Stop sharing your screen. I'll hit stop recording here.